Are you in that camp then, Sue, that eventually, maybe later on this year, the BOJ is going to have to cave and blink and normalize policy?
Well, it's a saying, in the long run, we're all dead, right? But, inflation is not the only factor that might compel the Bank of Japan to tweak its YCC. I think the most compelling case for a tweak is that the bond market functioning has seriously deteriorated. If you look at bid-ask spreads, spread between general collateral and special collateral repo, for instance, and these negative spillovers prompted the Bank of Japan to tweak YCC back in December, and it will probably be why it will look to tweak YCC sooner rather than later. But I would stress a couple of points here. I'd be very careful about overinterpreting a tweak of YCC as tightening. I'd also be very careful not to extrapolate any kind of tweak to YCC as sustainably bearish for dollar yen. And that's because a tweak does very little to alter the significant interest rate pickup on unhedged Japanese investors' foreign investments. So unlikely to really turn the ship around as far as the strong trend higher in dollar yen.
Yeah, and you've argued for yen depreciation. Sue, I have to wonder then, it certainly has helped the equity markets. This bull market territory we've seen already reached in Japan. Do you see more upside? You're getting a lot of interest from clients now when it comes to Japan.
Yeah, and if you look at Japan equities in isolation, it's a 30-year high now. But then on a relative basis, relative to international equities, we're still only around the middle of the range over the last 30 years. And absolutely, the more dovish policy from the Bank of Japan has been, a real tailwind for Japanese equities. But we do see that Japan is a key beneficiary to the ongoing diversification of supply chains, particularly the industrial sector. And of course, the weak yen has been very supportive of corporate earnings.